Let's take a look at these 14 questions related to generally accepted accounting principles, which also goes by the name GAAP. All right, so what's the goal of the matching principle? Well, I think the second one is the most appropriate response here. Remember that according to GAAP, we record revenues when they're earned, and then we match the expenses to them. So the second one that reads to record expenses incurred to generate revenues in the same period as the revenues recognized. To me, this is the most correct statement. Now, when a second independent qualified individual provides the same information, verifiability improves. The U.S. GAAP provides rules and guidance for what two primary financial reporting purposes. And of all of these choices, to me, I believe recognition and measurement are the best choices. When an asset or liability is initially recorded, what determines its amount? Oh, this brings in the concept of historical cost. So if we're basing amounts typically on historical cost, it wouldn't be replacement cost. And we're not taking into consideration future value or present value in most instances. Okay? Now, if I had to choose, well, it actually might represent the present value of the future cash flows in some instances, but I think the initial measurement is probably the best choice here. GAAP standards allow financial statements to answer the questions that investors or others might have. Which financial statement answers the question, how much money did the company make from operations in a given period? Now, you have to ask yourself, when they say how much money, do they mean cash flow or do they mean profit? When I hear how much money did the company make, I think they're talking about profit or profits. And we calculate profits from the income statement. If instead they meant cash flow, then the answer would be the statement of cash flows. I'm going to go with income statement. Where would you report resources and claims to these or those resources? Okay, resources is another word for assets. Claims of them represent who has claims to the assets. That either falls in the camp of liabilities or equity, owner's equity, right? So we're really talking about the accounting equation, assets equal liabilities plus equity. So this all appears on the balance sheet. What is factory equipment an example of? Well, that's a long-term asset, so we have to choose an asset. Publicly traded companies domiciled in the United States must adhere to standards, rules, regulations, and laws issued by which organization? Well, certainly we need to consider the rules that make up GAAP. FASB's involved, but if you're traded on a public exchange, you've got to follow the rules of the SEC. Well, if two of them are correct, then it has to be each of these regulatory bodies. I think that's our best choice here. Before revenue can be recognized, the revenue recognition principle requires that the product be shipped. No, that's not the case. It requires that the earnings process is complete, and it's not concerned with cash to be transferred. Now, if it's services, we want to say services that are completed, not necessarily booked. So when we're talking about completing our obligations, I think performance obligations to be fulfilled is the best choice. All right, what's the primary objective of financial reporting? Well, I think it's to provide useful information to investors, creditors, and financial statement users. To provide cash flow information, that's also an objective. And to provide information about resources and claims to resources, that means the balance sheet. Now, we could think that maybe this one falls under the first one, but I think all of these answers is the best choice. Using accrual accounting, when is revenue recognized? When the performance obligation is fulfilled. We talked about this in another question. This year's final paycheck will be issued on the last Friday of December. If you report the wages for the remaining 4 days of December as an expense in the next year, what principle are you violating? Well, that's matching. Remember, we have to match the expenses to the revenues that were recognized in the proper period. So if people worked during December, if your employees worked, and you're not going to record that until January, you violated the matching principle. Okay, U.S. GAAP provides the rule book to help ensure all for-profit and non-for-profit entities present their what accurately? Their financial performance, their taxes, their government records. Well, GAAP has nothing to do with taxes except for stating deferred taxes correctly. Maybe that's better left to an intermediate tax class, and also the tax liability. But that's not the main goal. Present their government records. I don't think that's it, and I don't think it's audit results. So I think financial performance results makes the most sense here. This will be our last question. What assumption states that a business is able to financially continue operations and is not planning to liquidate? Well, this is called the going concern assumption, which assumes that the company will exist long enough to achieve its goals and objectives. Okay, we're going to go with going